Yes, my name is Giulio Battaglia. I'm the Managing Director of Stenham Asset Management. We're an institutional asset manager based out of London, but we have very, very deep roots in South Africa. We're a wholly owned subsidiary of Peregrine, a South African listed financial services group. What we do is, as I said, an institutional asset manager, and we have been helping our clients look after their wealth, be it pension funds, family offices, other private clients and institutions for over 32 years. We're a specialist in creating absolute return, downside risk protection profiles for the products that we have our clients invest in. So I presented the case for how to grow and preserve capital during periods of market stress. And I guess the main thrust of my presentation was that we believe that we have come to the end of an economic period that essentially went from 2009 to 2017 and was characterized by increasing globalization, liquidity being pumped into the economy by central banks, growing profitability of corporates, low volatility, very, very importantly, and it's been an environment where we think beta-led returns have been the absolute right place to be investing. So we believe we're moving into a new economic environment, as we've said, and we think 2018 was a bit of a watershed moment, specifically the back end of 2018, which saw a significant correction across all major markets. In fact, 2018 was the first year since 2000, in fact, it didn't even happen in 2008, that all asset classes were actually negative for the year. In 2008, when we had the global financial crisis and we thought the world was ending, there were 4 asset classes that were actually positive. So why we think this to be the case? Well, we think that we've seen protection, governments starting to introduce trade tariff, as we've seen the discussions between Trump and China. Globalization is being reversed. Synchronized growth that we saw throughout 2017 has started to change to synchronized disappointment. If you look at the numbers, the Eurozone PMIs peaked in 2017 and have been on a downward trajectory. Similarly in Asia, and the US, which has been showing some signs of growth, has had some very stimulative policies introduced, like lower tax cuts. So we believe we're moving into an environment where people should expect an increasing level of volatility. That volatility can be quite extreme in a very, very short period of time, and that was what we saw during the last quarter of 2018. And so with that volatility, we believe it's time for pension funds to be revisiting their portfolios, to have a real look and analysis of their portfolios to understand if those portfolios are actually or the asset classes are actually as decorrelated as the theory would suggest. If all asset classes were negative last year, it suggests that maybe asset classes are more correlated than people think. So that's the premise of my presentation, and what we've been doing for the last 32 years, as I said previously, is helping our clients invest and protect and preserve capital during periods of market stress, and creating products that are truly decorrelated to traditional asset classes like equities and bonds. And we do that through fund-of-fund type of products where we identify specialist managers that really do not have their performance affected by what happens in the markets. And we have a product, the Stenham Trading Fund, that is designed to do specifically that. It's a product we've been running since 1993, and it's been very, very popular with pension funds. It's one that they naturally gravitate to when we talk to them about finding something that is going to insulate and protect their portfolios during heightened periods of volatility. So Stenham has been active in Mauritius now for just over 2 years. It is, and we've found it to be a wonderful platform from a governance perspective, from a ease of doing business perspective, and it is, in our view, a wonderful opportunity for us to introduce our business and our asset class not only to Mauritius, but also Mauritius is a gateway to Africa. The pension fund conference was held in Mauritius last year. It was, we attended and we sponsored last year, and we were very impressed by the number of gatekeepers, not only in Mauritius but also across Africa that attended, and how receptive they were to what we had to say. It is a bit of a learning curve, but our whole ethos with the people that place money with us is to partner with them, to train and educate them through the journey. We think Africa is emerging as a region that is looking to externalize assets. There have been regime changes in Africa. Governance is improving, and these sort of things allow for asset managers like ourselves to come in, identify pension funds that could do with the services that we offer, and we found the conference last year to be exactly that, an opportunity to engage with these gatekeepers, to talk to them about Stenham, and hopefully to find ways to work together.